Looking at dollar CAD here, we've had the a raid on these lows. We've got this bearish impulse, a correction in play. ATR of 90 pips, we've done 50. Still on the front side of this daily trend. Looks like we could be moving up into it, into resistance. We're at monthly lows. We're coming off last week's lows. And we've got last month's highs as a target. So it's picked up this liquidity below those lows that we've been talking about. It's moved up on the day, with London coming back in to the low-hanging fruit of the post-US Asian session. We can have an hourly raid of these lows here. So a move down for a move up. We've broken structure last Friday's highs, clearing the way for a move up. So we'll just see how this, we'll monitor this on the Aussie, going back to the analysis that was spoken about in the pre-open video. We talked about the Aussie being an inside day on Friday, which opened the risk of a lower close on Monday with 70.50 eyed. So staying with that analysis, which can be found on the FX Street website, Forex News, that's the title. Talked about Asia opening on the offer, which it did, and talked about the schematic and the potential price action, and we've pretty seen a duplicate of what was forecasted. We had the move up and we're looking for lower prices. So that was the dump, pump, dump, and pump in London. We've had these break of structures to the downside. Here and here, the lows of the day have been broken. So we're looking for a continuation with the opening low holding as resistance. The Asian low being broken in London. The stop hunt and the subsequent move down. Now we're having a correction of that. So we're back up into 61.8 of that impulse. Eight o'clock New York, an hour and a half before the cash open. We're looking for it to roll back over. We talked about 730 being a resistance area. So we came up to 71.20, sorry, 71.30, came up to 71.20. And we're raiding this resistance. To the point of control for the day. So just monitoring this CAD and Aussie. I quite like this Aussie first red day. So we've got a break in this trend line here. Got the M formation put in. This is the 1 minute chart. Back below the 20. Break of structure. Moving up into the M formation neckline. This is the previous day's low. Coming up to. Pretty strong correction this. So not ideal. Nevertheless, we've got that break in structure. If we get a 3-line strike on this, it would be pretty impressive for a short. There it is. That's what I was looking for. So targeting the lows of the day of 70.50. We're just going to take this. Now, what we could have done is taken on this candle. You've got the pin, bear hammer, and the engulfment. But I was pretty convinced by the 3-line strike below the trend line, the 20, the M's in place. We've already had a couple of breaks of this structure, albeit with the pins, so not ideal. We didn't quite get a lower low on that candle, but it was an encouraging shift in momentum from the 61, 62 of the bearish impulse. We've got the pump and expecting the dump. And if thesis is wrong, then this isn't the high of the day, then so be it. But we're coming up at the end of this minute to a new 15-minute candle rotation where we could get a surge to the downside. Or to the upside, whatever it may be. So on this 15-minute rotation then, we've got the M formation being put in place, probably. So we're looking for this 15-minute candle to break this structure. Get a close below there, that would be fantastic. So we'll just mark that off. Keep it solid for now until it closes below. And we'll just go and check out our 70-50 level. We've got 70-60s as a cluster of support, but down into here we have last Tuesday's highs, 58. This order block over here at 44. So I think our target's okay. Our target's okay. We wanted to take some off. There. About 10 minutes of this candle to play out. I'm going to make a coffee. It's worth noting that the euro has been the strongest and the Aussie has been the weakest for the day so far. So the 15-minute close on that, these wicks, when you've got a small body like that and these long wicks, they tend to get filled in because they represent, let's go on the 1 minute chart or maybe the 3 minute chart, they represent that correction and then the subsequent break of trend line and move down. So impulse, correction, impulse. Um, so we're looking for a break of 70. To take some off and move to break even. Which may happen on this next 15-minute candle and the turn of the new hour for a continuation to the downside. But considering we haven't broken this structure here, it could be a bit of a consolidative scenario into the cash open for the volume to kick in and really take this lower. So we'll just draw that in to remind of that. Cash open over here. So a bit of a pain trade for the time being. So what's encouraging, I mean, we've missed the trade unfortunately, but I've just spotted oil collapsing, so that's good for our sell on commodities complex thesis. You had the break of structure, you've got the M formation, the pull up, the engulfing three line strike, and then this break of the lows of the day. You could have got in here, you could have got in here. Fantastic trade. It's come off the highs of the week, the month, the year for a continuation lower. Anyway, we're just about coming to the end of this video, 20-minute allowance. So we'll just pause it and see if we can't see our trade take off to end the video. Or at least just get into a scenario where we're taking some profit off and breaking even. So we've got 4 minutes until the close. We've got this break of a predetermined area of support that we wanted to see break. I mean, we had that over here. We talked about this week. It's being filled in, and we're going to take some off. Right, well, it's a minute or so from the close of this candle. So I'm moving to breaking. We've taken some off. It's essentially a break-even trade now. And we'll just move our stop loss to the entry and just let it run for the day and get on with our day.